that's my jam. I feel good.
Fahmy.
How are you, buddy?
Love, dude.
Bull market, huh?
See my bull market snowman?
I saw a picture. That's a great bull market snowman.
Not bad, right? We're still in playoff contention in December snowman right there. Winning record snowman.
I know. If you were in the NFC East, you would have clinched already.
Low blow. Too soon?
No, it's not too soon. It's just pretty accurate.
Right on time. Fahmy, what are you drinking, brother?
I'm drinking champagne.
No, you're not.
You said you were drinking champagne. It's a bull market. I'm drinking champagne.
Dude, you drinking Veuve Clicquot?
Yeah, whatever this is. You know.
Yeah. Veuve Clicquot, classic. Madame Clicquot, she is such a badass. I mean, this is like, she's one of the greatest legends of all time. Champagne or wine of any kind. She's a G, man.
I don't know the story.
Yeah. Go read up on her. She should have blown up. Like, she was very aggressive. Like, she was like the kind of like weekly Tesla calls kind of gal. You know what I'm saying? She should have blown up. She went all in a few times too many, and she made it out alive.
She's on margin. She's on margin. The on margin champagne queen.
Man, good for her though. You know, I respect that. Man, she had some guts, especially when she did it. You know, winemaker, a female winemaker in Europe. Anyway.
Good stuff. Great stuff, man. So what else is new? Thanks for helping me put this together.
Yeah, what do you think about the logo Giancarlo put together? I thought that was cool. Nobody here is going to be drinking martinis.
It's fine though.
Nigerian might be drinking a martini. I feel like that's something he'd drink.
I have a feeling he's going to be drinking the Rocks tequila again.
Yeah, he is into his tequila, isn't he? So all right, so let's tell the folks what's going on. So
yeah,
so Fahmy and I we're always talking markets and talking everything, and I figured we invite a few friends over and see what they think about the market. So what were the two questions? Two questions, right, for everybody?
Yeah, we just wanted to get everyone together, or just a few of our friends. I haven't done a multi-person Zoom call, so I'm hoping it's not going to be too much of a cluster. But we just want to ask them what's one of the biggest lessons they've learned this year. It could be markets or anything in general. And also, what's a best idea for we want to do first half of 2021 rather than waiting till a whole year. That way, maybe we can all get together, maybe July 4th weekend or something like that.
And what are we doing? So JC and Fahmy are going to make a donation to whoever has the best trade, right? Whoever comes up with the best trade.
Whoever has the best performance. And it can be an index. It could be Bitcoin. It could be whatever they want. I don't care. And we're going to.
Why do you say Bitcoin? Like, just like you think that's something somebody is going to bring up?
I think more than one person might choose Bitcoin because Bitcoin seems to outperform every year.
Are you saying that's not your choice?
No, what I'm saying is it doesn't have to be a stock. That's what I'm saying.
Fair.
I mean, I don't know. We're making up the rules as we go. What do you think?
It could be soybean futures, for example.
Okay, I just tell me how to get a quote on that December 31st, and that's what we'll use.
Yeah, soybean futures, ZS.
Oh, that's right. It's ZS. So basically, we're going to ask.
It drives me crazy because SB is sugar, but that SB should be soybeans. It's very confusing.
I mean, that would make sense. Yeah, SB should be soybeans. Yeah, that would. But why would they do that? Because that would make too much sense.
I'm saying. All right, Fahmy. Before the riffraff.
What's the rules? It can be anything though. The rules are it can be anything, right?
Yeah. Who cares?
Okay. Yeah.
As long as it's liquid, right? You can't be like, oh, hey, I got this private,
So you're gonna donate whoever wins a bottle of wine and then $500 to the charity of their choice.
Is that what I'm doing? I'm down for that.
That's what I'm doing. Whatever. I
I'll match that. Fair.
I volunteered that. Just whatever, if they want to give to veterans, kids, animals, whatever they want to do, cancer research, God bless. So
and a bottle of champagne then, of my choice. You
want to do champagne? That's fine.
I mean, in your honor. See, I'm drinking an Amarone.
You said you were drinking champagne. So
I know.
This is the top of the market. So cheers.
Listen, Amarone is kind of a bullish Italian wine. Like what I like about Italian wine is that you save good money. Your money goes the furthest in Italy than any other country, in my opinion. You're getting the best value for your buck. Amarone, you got to pay up a little.
Okay. All right. You know your wines way more than I do. What are you, master? You're a master everything now. So not master, but you're sommelier, sake, everything.
certified Japanese sake advisor. How about that?
Oh wow, that's that's an intense title.
Fahmy, this is the move. I already figured it out, right? So I'm looking at charts, right, all day, every day. It's what I do, and people.
And you're an all-star at it too.
So I hear. People pay me to do something I'd be doing anyway. Same thing with the wine. I'm going to be drinking the wine anyway. The fact that people pay me to drink wine now, like, that's ridiculous. That's like not even fair, right? It's not fair. Fahmy, before everybody starts piling in, you first. What'd you learn this year?
Are we waiting for everyone so I don't have to repeat it, or are we gonna do it all like wait? Or I guess we'll just do it one at a time.
Fahmy, what do you like?
You want my lessons I learned?
Yeah.
All right, two things really quick. Don't fight the Fed, which is very simple. And
what does that mean? What does that mean? Don't fight the Fed.
Don't fight the Fed is that the market is driven by two things: earnings and interest rates. So I even wrote an article I wrote two articles, middle of March and and early April, right around the bottom, saying that I wrote these articles for Yahoo Finance, saying just because the coronavirus numbers will get worse, it doesn't mean the stock market has to get worse. Because one, the technicals were actually very strong, and two, you can't fight what the Fed is doing. In other words, shut out all the noise. And I think this is a lesson a lot of people have learned. Shut out all the noise. And as far as from market participants' side, pay attention to what the Fed and what earnings are doing.
So what does that mean? So because the Fed's been telling you that they're just going to create liquidity, and that makes market participants feel more comfortable knowing that they have that backdrop, don't fight in trying to short that, knowing you have the most powerful monetary institution in history against you. Like, that's probably not the fight that you want to fight. Do I have that right?
Yeah, that's exactly right. I mean, this is, and I hate to say this, but we just have to separate Main Street from Wall Street. As market participants, we have to focus on analyzing Wall Street. It is what it is. And you have to separate your politics, separate whatever you feel socially and all that stuff. And don't fight an equity-friendly environment where the Fed is providing tons of liquidity and basically interest rates at zero. And the biggest difference between 08 and 09 and this time around is the Fed didn't wait. The Fed did it immediately. So...
And then what about when you get that pushback? Like, for us, like, we could just make a trade. We could work from home. We could work from Vegas. We could work from Europe. I mean, for us, it doesn't matter. As long as we have an internet connection and, a way to communicate, we're good. So what about when people are like, oh, another jobs numbers miss, complete bomb on the jobs report. By the way, S&P 500 new all-time highs, more stocks around the world are making new all-time highs. Like, what do you say to people that are just like so frustrated with that, quote unquote disconnect? For you and me, we know that the market's a leading indicator, but for those who don't get that, what do you tell them? That the market's a leading indicator? Yeah,
I mean, the market's a discounting mechanism. It discounts what's going to happen 6 to 9 months from now. I mean, the news is miserable, but if we got out of the Spanish flu in 2 years with no technology, no drug companies, no nothing, no vaccine.
Were you around for that? Were you there for that?
I was around for that. Yeah. Twitter was off the charts back then. Hashtag Spanish flu was trending for like 2 years. Anyways, the Spanish flu was around. And if we got through that in 2 years, then I think, we could get through this quicker. So yeah, you have to separate the two and keep in mind that Wall Street always looks ahead. Oh, there he is.
There he is.
Oh, would you just rob a bank? Are you the getaway driver? I love it.
I like that stock twitch swag. I like. How old is that? Is that new or is that old?
Old school. No, I've had that.
That's a great hat.
6 years or so. Got to throw a shout out to stock twits, man. That's how we all came together, right? That's how we know each other.
That is true, ladies and gentlemen.
Who was I telling the other day?
Brian Shannon.
I was telling someone the other day, like now it's funny the three of us are on here. Like, remember the Stock Twits blog network?
Yeah. But the TV show, the Stock
Twits TV.
Yeah, that was a real thing.
The next big move with Joe Fahmy.
There you go.
Alpha Trends, only price pays.
You know it. Relative strength charts.
Brian and I can do each other's act all day. It's great. Brian, for people who don't know you, which they should just turn this off if they don't know you. Anyway, give a quick 5-second introduction, who you are, what you do, and we'll go with the first question. One of the things you learned this year.
Okay, yeah. Brian Shannon, alphatrends.net, at alphatrends on Twitter. I've been doing this full time since 1991. CMT, wrote a book. etc. So let's just dive right into some content. Like you said, what's the biggest mistake or lesson of 2020? Early on, when the coronavirus hit and the market started rolling over, fortunately, I got a side. But as the market was still down in March, and then even just in April, I think, early April, I was saying, I was one of those people who was expecting a double, at least a test of the low. I was still cautiously getting involved in some stocks, but I sent a tweet out, and JC actually picked up on this. I don't know if you remember, JC. I wrote, "It is different this time." I really honestly believed at the time that this was going to be something that would send our market into a bear market for a while. Fortunately, I sent that tweet and I was about to write a blog post about all the good reasons why that made sense. And then I was looking at my charts going, but wait a minute, these things are bouncing and we did make a little higher low here over the last week and a half. That's not my game to play. So the point is, it's true, only price pays. If I stay focused on what I know that I do best, my game is price action. Forget about all that other stuff and trying to intellectualize it, because I would have been blown sky high if I traded my opinion rather than just listening to the market. Yeah, exactly, JC.
So Brian and I basically said the same thing. He didn't even know I just said my lesson was don't fight the Fed. And, you say it beautifully, but, you have to put aside your opinions on the market and pay attention to price action.
Brian, how about this? Let me ask you this. We put on some shorts in April, right? We're running into some, former support levels. There was a bunch of reasons. We put on 2 shorts in particular. We got steamrolled immediately on both. Yeah. I think one of them, we never even got an entry, I don't even think. Steamrolled immediately.
Yeah.
We stopped doing that. But at the same time, our longs were exceeding expectations. This was all happening at the same time. So what was that information? Just stop shorting stocks, you idiots. And we did.
Yeah, you paid for information. So
that's
what?
Right.
Yeah, I mean, that's part of the process. I mean, what are you going to not listen to the market and continue to fight it and say this market doesn't make sense? I'll show them I'll short more.
Unfortunately, some people do, though. That's where you have to separate your ego, because the stubbornness really kicks in.
The market proved us wrong right away. See ya.
And a lot of sharp professionals were in the same camp saying, like even IBD, some of the people, we had a follow through day, but it's probably going to fail and we might go lower. But the market proved a lot of us wrong.
The market knows all, and we've got to stand aside. If you do, I don't know where I learned this phrase, but I love it. It's better to be on the sidelines in cash than it is to be in the market wishing you were out. So, having that, shorting and say, hey, I'm involved in this market and I'm going to show them what I know. Yeah, that's just foolish. Listen to the market. It just, that's what makes sense. And fortunately for the three of us, JC, you kind of had the same experience, shorting a little bit and got run over, but you listened to the market.
Thank God.
And
we wouldn't have been as bullish had we not taken those shots. I'm telling you, we wouldn't have been as bullish.
I agree. Yeah, you paid for the information. You're like, wait, the market just punched me in the face.
Yeah.
And the market is way bigger than me. This is Mike Tyson here. This is some big monster that I don't want to tangle with.
You're being penalized for shorting stocks, and you're being penalized for taking profits at your targets on your longs. This was in early April, bro. BC Lund, what's good?
Brian Lund, welcome.
Hello, gentlemen.
I was so excited. I haven't seen you in forever. Great to see you, my friend.
Final table at the poker tournament recently. Congratulations on that.
Yeah, I got my pocket aces cracked. Can you believe that?
It sucked. I've never had that happen.
I don't even know what that means. I'm so not a gambler. I don't know any.
It's not a wine term, so you don't know what it means.
What does that mean? Pocket aces cracked? How do they crack?
Brian Lund, for the people who don't know you, give us a 5-second intro. Tell us who you are and give us the details.
Yeah, so Brian Lund, I've been trading and writing about markets for over 30 years now. I write a weekly newsletter called The Lund Loop, which I bill as the intersection between trading, markets, and life. Live in SoCal, got a couple kids. I like punk rock, craft beer. I'm a drummer.
And a phenomenal drummer.
I don't know about phenomenal. I know about that.
We met where? Stocktoberfest a couple times, one of those events?
No, the first time we met was out in Vegas. We met at the God, what's that one hotel?
Traders
Bally's.
Expo, maybe?
Yeah, that's right, at Bally's. And you're actually the first person from FinTwit that I ever met in real life. And you were super nice. You were super generous. You introduced me to a lot of people. And I think I probably met you most in Vegas through the years. So.
At different events. Yeah. Brian's a for people who don't know, phenomenal writer, incredible blogger, and just like one of the best. So thanks for being with us.
Yeah. Thanks for having me.
We're talking about real quick lesson you've learned. It could be markets. It could be real life. One of the biggest lessons you've learned this year.
I think it kind of dovetails into what JC and Brian were talking about. This is the year I think I finally, after 30 years, learned to be a mindful trader, right? And what I mean by that is every year I relearn the same lesson, which is that I'm my biggest, worst enemy in the market, right? And I say that I'm an 80% technical trader and a 20% instinct trader. But sometimes when technicals and instincts diverge, I hang on to my instincts longer than I should. And I had a really interesting parallel this year to what happened during the financial crisis. The market had been tanking in 2008. We saw these technical signs that maybe we were seeing a bottom in early 2009. But I felt like, no, this can't be the bottom. There's too much gloom and doom out there. And I fought the trend for a year as it went up. This year, we had that big 34% drop, and we started to see a little bit of a technical bottom. And I felt myself going to that same place, right? Millions of people are out of work. Businesses are shutting down. We're in the middle of a pandemic. This can't be the bottom, no way. And I was getting ready to kind of fight that trend again. But I was more mindful this time, and I was more aware. And I'm like, okay, you know what? Let's just go with the technicals. So I think that's been the biggest breakthrough. And it just goes to show you, it doesn't matter how long you've been trading, you always learn things about yourself, and then those always come into your trading.
Jay Woods, welcome, my friend.
Woods. What up?
What's up, guys? How are you? Thanks for having me.
So awesome to see you. Give us a quick 5-10 second intro, please. For the people
name is Jay Woods. I am a former floor trader, been on the stock exchange up until this past October, November for 28 years. So right now we're going through a little transition, which I'm excited about. Won't go into details there, but I've been doing a little day trading for the first time in my life, outside of what I did every single day of my own life, but my personal life.
How's that going?
It's going very well. It's been a very easy market. Right? It's kind of scary. I know this won't last, but right now there are a lot of momentum trades to put on, and the last 3 weeks have been pretty fun. So,
what did you learn this year, Jay?
We've all been talking about just one of our lessons is learning, about just separating price from the news and all that, especially around the, March, April timeframe. What's one of the biggest lessons? It could be markets or life in general. What's one of the biggest lessons you've learned this year?
Yeah, it's been a pretty boring year. What are we up? 6% in the Dow, relatively flat. So no, wear a mask was one thing that I learned this year. But as far as trading and markets, earmuffs. Stop listening to all the news and all the hysteria. And just follow price. I know it's cliche, and Brian Shannon, our friend here, price always pays. But my God, when things were going crazy, what does everyone do? And now we're technicians, obviously, we look at the charts, but more than ever, you really had to dig deep and just shut out the noise. Because if you think about like Disney's, perfect example. Disney's a stock I've owned for 15, 20 years. They're not going to theme parks. No one's going back. They're going to lay off everybody. Okay, we got the streaming platform, but could that save the world? Apparently it could. But you hear the headlines and the end of the world. You just, all right, I got to get out. It's never going to come back. And when you took all of the noise away and just focused on price, we'll look back. This was an opportunity that we may never see again in our lifetimes. The speed at which things happen, that scares me. And as someone that's been on the floor and seen things evolve, that is one of my biggest fears, is just the speed of markets. But if you are patient, if you have a game plan, if you set price points and are responsible, then the opportunities this year were second to nothing I've ever seen. People talk about 99 and 2000 with the IPOs. I lived through that, and that was exciting. I was more a witness because I didn't have any money to really invest at the time. But I remember it. The day-to-day swings, I said I've been day trading for the last 3 weeks. I'm hitting 10% moves in a day or two. These are returns that I would be happy with over a year, and I'm hitting them like it's a normal thing. So it's been crazy, but have a game plan, know your time frame, and block out the news. It's just too distracted.
Has there ever been another year, at least in our lifetime, where you illustrate how important it is to tune out news? I mean, this is like the worst news, like right up the street. You're saying Disneyland, they're closed, right? Yeah. And you think like, I'm not buying Disney stock, right? So, I mean, if you don't learn the lesson this year about tuning out news, you're never going to learn it.
Exactly. And, the cruise liners and, let's look at Boeing as a perfect example. I'm sure you guys and hopefully our audience has followed that chart. Yeah, that thing was holding 300 for months, weeks. It was actually a year. When it finally broke down, that was it. Get the hell out of this thing. And then it got overdone, and now it's slowly coming back. Have they made any new jet planes since? I don't know. But I can tell you what the price of the stock has done, where I want to get in, where I want to add to it. And now I'm seeing a continual uptrend is flagging. So maybe we want to buy more as it rallies into the year end. But yeah, the news, it's frightening. It's absolutely frightening. And then you saw it to the extreme of the other side with the Zooms and the Teledocs of the world, where everyone, the Peloton. I mean, what's the valuation on Peloton?
The gazillion, I think. Right? I just looked it up. Gazillion.
150. Yeah, gazillion. There you go. So.
Brian Lund, to your point, a friend of mine who's been around for a while, he said in the late 60s, the news was just as bad. Vietnam, race riots, Kent State, everything. The difference is, one is social media, there's all these platforms to disseminate the news. And two is there's like 20 cable channels. And so there's a lot more platforms for the news, where back then it was just like, the ABC nightly news type of thing.
Well, and there's an echo chamber effect, right? And people tend to listen to only what they want to reinforce their negative opinion or their positive opinion. And I think that affects people a lot more than obviously did in previous years.
Yeah. How about the people that never changed their minds? How about the people that were double dip, like what Brian was saying, double dip? I was in that camp too myself. Some other very smart friends of mine were also. Imagine not changing your mind and continuing to get steamrolled for another, 10 months, 8 months, whatever it was since April, 8 months. Go check my math.
There's people like that right now. I know people that are they're trying to get short. They've been trying to get short for 6 months now. And that's the only thing that's worse than not being in the market, is trying to fight that trend. And
well, on the East Coast, it's too cold to put on shorts.
Zor, what's good, brother?
What's up, guys?
Zor trades.
Hey,
Zor only plays basketball if it's half court. No full court.
No full court.
Hard no on full court basketball games for Zor.
Well, half court's the real game, half court.
Zor, give us the 5-10 second intro, and what's one of the biggest lessons you've learned this year, markets or life in general?
Well, I'm going to skip the intro, but as far as what we learned this year is, number one, this year, the less you know, the better off you are. If you were busy out there looking at what's going on in the real world, you're done. Nothing makes sense at all. Number two, all those metrics, criteria, breadth, sentiment this year, they've been irrelevant across the board. And that's something that I think that's the reason why some of these quant funds had a tough time, because they historically, all those things they look at, it just they weren't working. I seen breadth indicators that are 4 times what really high was a year ago, and they're 4 times that amount, and it hasn't mattered at all. So I think sometimes the less you know, the better off you are. Turn off the TV and just focus on what it is that the market is telling you.
Starting to hear a theme here.
I know. I feel like everybody has said the same thing in their own way.
But everyone has said it.
Their own anecdotes.
Everyone has said it, not knowing what the previous people have said.
It's true. And Zor said it like in a nice, like the way he put it is different than the way all of us put it.
But it's all the same.
It's all the same shit. What up, Dr. J?
Dr. J in the house.
Hey, good to see you guys. I was in a couple of minutes ago, and then it dropped me out. I'm not sure why.
Yeah, because you went to go get a drink. So.
Well, yeah.
What are you drinking?
It's our wine club tonight. So we've got what they do is we take over a restaurant, Joe, every month for one night, and we bring all our own wine paired up with whatever their guys wanted. And so right now I'm drinking a 1990 Bordeaux, and it's kind of chewy, even though I've got it decanted. It's kind of chewy right now.
John's just flexing now with his 1990 Bordeaux. That's just a straight flex right there. I see you, Dr.
Jay Woods. What do you have? You have a 2020 Heineken? What do you got?
I have a Yingling, a little Pennsylvania lager.
Nice.
BC, what do you got out there?
I've got a Saison, a Tank 7. It's a farmhouse ale. It's from this type of beer is from France. The farmers would make it with whatever herbs or spices they had on their farm. You get a lot of coriander, and they bury it in their cellars in the winter. And then in the summer, they bring it out, and their workers would drink it because it was crisp and light. So this is from Boulevard Brewing in KC. So Tank 7.
Great stuff. Great
How about
stuff.
that for an explanation?
You didn't know that beers could be that complex, JC,
I
did
thought you were.
Damn, BC coming in hard.
I thought you were
with the
bullshitting
beer.
us to start, but you were actually. That was really
No,
good.
seriously, dude. I take my beer serious. It's not as serious as you take your wine, JC, but I like it.
No, I respect that. Well,
Dr. J, we've asked everyone coming in, what's the biggest lesson you've learned this year, markets or life or whatever in general?
Since I don't know who will see this, Joe, I'm going to stick to markets. But I'd say that buying the dip still works. This might have been the biggest buy the dip in history. Now, you didn't want to buy the first day, but you never do. But buying the dip, I remember when Mohammed El-Arian came on just as the crisis was really getting rolling, and he said, "Buy the dip is dead. John, buy the dip is dead. It's dead. Trust me, John, it's dead." And I said, "I don't think so." You could practically, and I've done this in slides before, you put his comments, it was this close to the bottom of the market, looked like that. This close to the bottom of the market. Same thing with Guggenheim. I like Scott Minerd, but Scotty was dead wrong too. So many of the big folks that give advice were just dead wrong on this. You guys know that I think Tom Lee was really right. I think Tony Dwyer was really right. Many of you guys were really right. But boy, the big guys, they were doing the exact opposite of what Warren Buffett always says. Buy when they're fearful, sell when they're greedy. What do you think they are right now? Because to me, it feels like they're getting greedy.
Agreed.
Collectively, I guess the market collectively, we're getting greedy. Doesn't mean we have to crash, but it's just like, if you bought when they were fearful, wouldn't you want to, sell some here when they're greedy? So I'd say, Joe, it was.
Let me throw this out there for you guys.
I wish I had a green hammer to tell you stocks only go up.
Let me tell you something about. Let me throw this out there for you guys, because we're talking about what we're going to be buying for the first half of next year, right? What do you guys like? What if I told you that this is probably the beginning of a new bull market versus the end of an old one? Dow Industrials did nothing for 3 years. Transports did nothing for 3 years. Emerging markets are down for over a decade. Europe's flat for 20 years. Financials are still below their 07 highs. To me, this seems like more of the beginning. This seems like 82. This seems like the mid to late 40s. That's what it looks like to me. I'll just leave it at that, and I'll throw it to you guys. What do you guys think?
So 82, so a 17-year bull market, is that what we're looking at, JC?
I think when you look at stocks in general, when you look at the United States from the mid 60s through the early 80s, when we did nothing, those markets, that environment looks like Europe over the last 20 years. It looks like emerging markets over the last 12 years. And then shorter term, the Dow Jones Industrial Average and Dow Transports, arguably the two most important stock market indexes on earth, did nothing for 3 years and just broke out a month ago. So, to me, and then not to mention all the breath thrusts that we're seeing historically come at the beginning of bull markets, not at the end during exhaustion. So, for me, it's not so much buy the dip as it is buy this breakout.
Yeah.
No, I would agree with that, but I'd also say that, I think we're smart enough to state the obvious. There's obviously going to be the pullbacks, normal corrections. Like, Zor and I talk about all the time when you say, hey, there'll probably be a 15% correction next year. And people say, how would you say that? Well, that's the average for the last 80 years is 14.5 intra-year drawdown.
Not only that, I think, Brian, you said 17 years. I think you have to cut that up. You have to cut that by at least 10 years. Things are moving so quickly now because information is just, we get information so much quicker.
That's a great point.
You got to cut that in half, 3/4 at least.
Yeah.
Zor makes a good point. Like, the cycles are happening fast. Just think about, with everything happening so fast, Europe's flat for 20 years. Emerging markets have done nothing for 12 years. To that point, like, that's, I think, a bullish characteristic. Anyway.
All right. So what's your stock?
I think that we want to be spending our time looking for stocks to buy, not looking for stocks to sell. You know, people are like, oh, well, the market is due for a correction. Well, technology, which is 25% of the entire S&P 500, has been down for the last 3.5 months. It's the largest sector. You want a correction? What do you call that? You know, so I think there's sector rotation, and I think we focus less on the indexes and more about the fact that we should be looking for stocks to buy. So I can give you stocks. Look at the biotech sector, look at solar. I mean, technology, semi, software. You don't need me to tell you which names. I think it's more important to focus on the fact that we should be looking for names.
What about soybeans, JC? What about soybeans?
To fade all day.
We got a couple new people in here. Jared Blikre, how are you?
I am good.
Give us the 5-10 second intro and what you learned this year. It could be markets, life, or anything you want.
I learned a lot this year, but first my intro, Jared Blikre, reporter, producer, anchor, Yahoo Finance. And I learned this year, it's kind of a continuation of a lesson that I've been learning over the last 4 years, which is that the market just responds to everything so much more quickly. And it was incredible to see us descend into the fastest bear market in history, only to rebound to new highs, record highs, just a few months later. And I traded through the flash crash. Well, actually not that particular day, but other similar days. The US debt situation in August of 2011, it took months to repair that kind of damage to the markets. And then Brexit came along 4 years ago, and then the election of 2016 came along 4 years ago. And it just seems like the markets overall, although they tend to react more violently to situations, they also tend to respond and repair themselves more quickly. So I think this is kind of the new norm, given the liquidity trends that we've been talking about over the last 20 years. I mean, Jay, I was with you in a webinar last week just talking about this, and you witnessed this at the New York Stock Exchange on the floor over the last 25 years. So all in all, more volatility, but also it doesn't necessarily mean that we're going to be mired in it for months at a clip. It just, the markets are different now. And so my call for the next 6 months, and I have no idea how this is going to play out, but I got to go with what my gut is telling me here, and that's Bitcoin and maybe Ether. I just love the fundamental setup as much as there are fundamentals in Bitcoin. You know, it's kind of a tongue-in-cheek characterization.
All those earnings, you know.
Yeah. Also, you know, switching out management at the last minute, you know, new CFO. I just love the PE ratio and all that good stuff of Bitcoin. But just on a technical level too, you know, rising, just climbing to 20,000, which is where it topped out a few years ago, and then coming back, just consolidating for a couple of weeks, surging higher. I got a lot of people have price targets around 24 to 27,000. That's roughly where mine is, 26,000, which is actually pretty short term. You know, going from 20 to 25,000 takes probably a lot shorter time in Bitcoin or a new hot asset than it does the Dow, which took about 10 months just by comparison. And these things, as a financial journalist, even though they mean nothing to traders, I do keep tabs on them. But my call for the next 6 months is Bitcoin. I think it could easily hit 50,000, and whether it corrects 70% or 80% off that level, you know, in 6 months and I end up 20, 50% underwater, I don't know, but I see it going materially higher.
So that's nine of us for Bitcoin. We're putting all of us down for no.
I just got there.
No, I'm kidding. We have to do some quick intros. I want to do them as they came in. Ivanhoff, give us a quick 5-10 second intro and one of the biggest lessons you've learned this year.
Everybody knows Ivan. You don't need an intro.
Hey guys, so born in this area, live in San Diego, California for the past 10 years, manage money for myself, for other people with Zor Capital. And that's about it. What did they learn? I mean, we were kind of reminded that the biggest long-term opportunities in the market happen right after 20% plus corrections, which again, we saw this year. And we also saw that relative strength continued to work amazingly as an equity selection indicator. I remember back in February when the market started to crack down. For example, Cloudflare tried to break out to new all-time highs. Obviously, a couple weeks later, when we had that guillotine stage, when the entire market went down, Cloudflare also went down to all-time lows, but also was one of the stocks that recovered and was among the first to hit new all-time highs, and it kind of tripled from there. So that same equity selection criteria continues to work every single year during corrections. My pick, I mean, do you want to be a small cap, large cap, or anything?
We haven't done the picks yet, so we can wait till the end. Let's I want to bring in Christian.
Ivanhoff, just tease him.
Christian Fromhertz. Great to see you, my friend.
Hey, what's going on?
Thanks for being with us. Give us a quick intro and one of the lessons you've learned this year.
Sure. So Christian Fromhertz, Tribeca Trade Group. So I run a trading service, stocks, options, basically anything that's going to move, anything that's going to trend. So I would say, lessons for this year. First of all, I think, from a trading perspective, anybody could basically write a book and just cover this year, because I think there's so many different lessons. We've seen so many different, trends and so forth just throughout the year. And of course, everybody's fixated on what they've seen the last few months. But I would say it's just one of those lasting principles. One of my weaknesses, I would say, in trading is stubbornness. So you got to get rid of that, and you got to just continue to be objective. I think in the beginning of the year, the way that the market was trending down, you couldn't be one of those buy the dippers. You kind of had to wait to see where things settled and so forth. So, whatever 2020, 2021 holds for us, I think you just want to continue to kind of trade the market in front of you, not make any too many predictions, because if you made predictions for this year, I mean, come on, right? All over the place, right? So you could have been right, you could have been wrong, I guess, both from what you could have said in the beginning of the year. So, follow the trend and follow the price, I think, is the most important thing to do.
So Jay Woods, I've been wanting to ask you, 25 years on the floor, I can't even imagine the stories you must have being down there. Can you give us, I don't know if you had some quick stories, Art Cashin stories, amazing people you've met, interesting people on the floor that have passed through?
Yeah, I mean, you get to meet everybody and anybody. I mean, just being at the post next to the CNBC set, you get to become friends with everyone on the set there, the camera guys behind the scenes. I guess one of the stories I haven't told is I became friends with Steve Guttenberg of Police Academy fame, and he walked by the post. And he's about to go on air, and he goes, "Give me 2 stock tips. I need 2." And I don't do that. I don't talk about individual stocks. And, he put me on the spot. I said, Salesforce and PayPal. And he goes, "Give me your card." I give him my business card. And I'm like, all right, this went nowhere. And then he shook my hand as he left and walked away. 6 months later, I get an email from Steve Guttenberg asking me, "Well, let's go to dinner. I want to thank you for those 2 stock tips." I forgot about this whole occasion. So I called my friend Josh Brown and Michael Batnick, and I said, "Listen, Steve Guttenberg wants to go out to dinner with me. I think he is looking for some financial advice that I can't give him, and I'm not going to sit there and give him stock tips all night long. Can you join me on this?" And we okayed it, and we went out to dinner with Steve Guttenberg, and it was one of the coolest things, and that was provided by, the floor. But, there are a lot of floor stories that should never leave the floor. And that's where they belong. It's changed dramatically over time, but it was the greatest place. It still is the greatest place in the world. It's lost a little of that vibe. You get it time to time from the big IPO days. Unfortunately, with COVID, it totally changed everything. So, my last day, which was in November, was very just, there was no one there. So you worked, you walked off, and that was it. But we'll have to go out for drinks, and we can share a lot of good stories. There were a lot of great times down there. Too many to think of.
Irusha, what's up?
Hey, Irusha.
What's up, man? Good to see you, JC.
Irusha, welcome.
Yeah.
Thank you for taking time out of your Raiders pregame to join us.
That's right. I know. I'm preparing for another disappointing loss.
Oh my God.
That's my life.
You're playing the Chargers. I think the 12 of us can beat the Chargers.
Yeah, you'll be surprised. The Raiders always seem to find a way.
Give us a quick, we were asking everyone a quick 5-10 second intro and one of the biggest lessons you've learned this year. It could be markets or anything you want.
Okay. I'm Irusha Peiris over at MarketSmith. And one of the biggest lessons that I've learned this year is, I'll go a couple. Outside of the market, I'm actually a lot more productive from home, which really blew my mind. And as a company, I think we're a lot more productive from home. And so I was always against working from home before that, but now I'm all in favor of that. So that's one thing that I've learned from 2020. Something market related, don't get caught flat-footed. These markets turn a lot faster than even like 10 years ago. And so you got to use your signals. You can't let your emotions get the best of you. When you got our signals in April, I was 100% convinced that it was not going to work. But I just started putting a little bit of money. I just followed the rules because I didn't want to get caught flat-footed. And I think one other thing I've been working on trying to buy within bases and stuff like that. A lot of times I've been more comfortable buying out of breakouts like IBD. William O'Neill's always taught us. Really kind of working on the earlier entries, and obviously this environment's been a lot stronger and much more forgiving. But that has helped me a lot this year too. Just had a lot of practice at that because there's just so many actionable items, stocks. So those are a few things I've learned.
Awesome. Thank you. Brian, Shannon, you're too quiet. Give us something.
Yeah. Hey, I
give
agree.
us some wisdom.
Talking about, breakouts on a, buying a breakout. It's something that is, 10 years ago that used to work. There was a perfect example this week. I was talking about this RVP, and yesterday I put on Twitter, here's why I always sell on the breakout. Ask where it came from first. And if it's, had a 20% rally in 3 days and now it's breaking out, it's not smart money buying there. I always feed into that. So I agree with Irusha that, the markets are so fast and you've got to be more anticipatory. And at the same time, like you said, there's it's very forgiving as well. You've got to be just as quick with the discipline to cut your losers because they can just completely fall apart, instantly.
Brian, let me ask you this. So rather than buying a breakout, right, where it's come from, you always preach that, and I agree 100%.
Yeah.
When we get to former highs, let's just say former resistance, and we start to absorb that supply, and then it corrects again and then comes back again, and we start to see some churning at those levels, and then you get the breakout, you'd much rather buy that than something that's just getting through on the first test. That's bound to fail, right? Is that your point?
Yeah, definitely. I mean, if you had a spike higher and then it comes down and just runs right through it, it's already expended a lot of energy. But if it's built a nice, tight channel prior to that breakout, the energy is kind of built in and constricted and ready to expand out of there. And then you have a good, most, what I like to call the most recent relevant higher low to put your stop under for whatever the time frame it is that you're involved in. And that's something that I think not a lot of people talk enough about is what's your time frame. We're all different time frames here on this call. I happen to be, 2 to 10, 12 days. That's pretty much maximum for me. So, as far as trends for next year, I have no idea. I have no interest. I'm not going to try to,
I thought you were going to bring some obscure coin, some obscure crypto that no one's ever heard of. You're like, that's the one.
No, actually not a chance. I only trade the three big ones, Bitcoin, Litecoin, and Ethereum. I have no interest in them. I can't even trust those ones. So why would I trust the shit coins?
I think they should change long-term capital gains to 7 hours for all of us. I think that would be a good change for all of our time frames. Christian, I want to bring you in. Give me a feel for, are you more technical, fundamental, a little bit of both? What's your style?
Definitely technical, but it helps when you have, some type of fundamental conviction too. I find that some of the trades that could be just purely technical and something that's just flashing on your screen, right? You can kind of get in there for a scalp or for a couple day trade. But if I don't have the conviction and if I don't know it enough, then odds are as soon as I see something bad on the tape, that'll be the first one that I yank. But, purely technical, but it just helps to kind of have a little bit of that reasoning too, where you could actually like something and you've gotten to know a name, over the course of a couple weeks to a couple months. So you're a little bit more familiar with the ins and outs of how it trades. Like an SE an SE is a great one. The C Capital, right? Like that one's just such a beautiful trend, such a beautiful stock that, it'll break out, come in and consolidate and, act, weak a little bit. And then all of a sudden it's back out to 52-week highs. So like, I always like to give examples. Like that's a great stock. It's a great trend. And it's one of those names that it just doesn't seem to get hit that hard if there's market weakness. So, those are the names that I love and I come back to over and over again.
Jared, besides Jay Woods, who's your technical hero in the world?
My technical hero. Well, Brian, can you guys hear me? I don't know if I have the unmuting cues. Here we go.
No, we can hear you. Yeah.
Great. So Brian Shannon, been following him for well over a decade, but also the guys from S&B Capital and oh man, there's so many great people and they just willingly give up their time on Twitter in other, Dr. Steenbarger, for instance. So these guys who have just given and given over the years, these are my heroes because they are teaching people the right way. Everybody has to learn through their own mistakes, but you need some guidance. And there's a lot of bad actors in this space, a lot of people out for a quick buck, and I don't see any of those in this room. And that's a great thing. The trader community is great. Once you find those people to trust who you can not rely on necessarily because we all have to do our own homework, but who you can know are coming from not a personal space, but from kind of an objective space. And just, it's a great experience to be among these people.
Awesome. Thank you for that.
Can I say one more thing about trader community, which was just mentioned?
Yeah, please.
Well, I just think, considering like how difficult this year has been, outside of trading, I just think this year, in terms of basically like, what we all do, trade, invest, and so forth, it's just been a great place, to really be, this year and the last couple of years. And, even, I came from the institutional side and I've moved over to I'm a retail trader now over the last 3-4 years. And I'm just, really surprised at how well, you can network with people. Twitter, as much as everybody kind of jokes around about getting trolled and all that stuff, I mean, you can really find some great people to kind of connect with, learn from. It's really been pretty valuable. And I think even from the institutional side, right, the retail side has been so quick to come, to jump on trends and so forth, that it's a pretty interesting thing from where we came from a couple of years ago, where, the younger trader really didn't want anything to do with the market. And now, it's been a complete 360. And now we're like in the hottest space all of a sudden, which is completely bizarre, right?
No, it's true. I mean, we're very lucky. I would say one of the lessons I've learned this year is gratitude, because I have a lot of friends, I'm sure we all do, in services industries, restaurants, music, that unfortunately can't work. And we're very lucky that we can. And I think that's just something I'm reminding myself of on a daily, if not hourly basis. And I think it's great that we're very lucky that we can do what we can do.
Absolutely.
Zor, you're quiet. Give us something. Give us some knowledge.
I'm just going through some charts.
Zor's screening right now.
I'm trying to get my pick of it for the 6 months. Just give me a second.
Just pick any
one for you. I got one for you, Zor. Globus Medical, GMED.
Is everyone screening besides me? I'm drinking champagne. You guys are screening.
It's right up your alley. Look at that base, baby. 3-year base.
No, listen, I'm gonna go. I got a couple of bases that I'm gonna pick, right? And I already have them.
He's already hedging. He's coming up with multiple.
We'll do it. We'll do a roundtable and everyone will give their pick.
Okay.
And we'll do that shortly. Brian Lund, give us some music stuff. What have you been drumming to? Brian's a phenomenal drummer for people who don't know. What have you been playing, drumming along to besides Rush, which is very difficult as a drummer, I might say.
Yeah, I found as I get older that music stopped in 1998. Like, I don't listen to anything past that. And so let me just digress for a minute. We live in a great time, right? And technology is fantastic. I tell my kids all the time, I say, you're so lucky to live in this time. They say, well, so are you, Dad. And it's true, right? But my kids have a better chance of learning about music from the 30s or music from Africa or music from Latin than I ever would, because they can get on Spotify and find these algorithms that will take them down wormholes. They're going to have a much broader musical background. They already do than I do. But so I'm going for old stuff. Like I've been playing along to the Kinks a lot lately, playing some old punk rock. I finally got my drum set like a year and a half ago out in the garage. So my neighbors hate me. Screw them. I don't care. It's great. It's all good. You as a drummer understand this, Joe. So.
No, I understand. I have my V drums, but you can't set them up in New York because they're too. One of these days, I'll have to post a YouTube video. One of these.
What about the drums that don't make any sound? That has like the headphones. What are those called?
Those are the V drums, but they still make it. They still make it. You can play them
at 2 a.m. because they're made of mesh and rubber, and they have great sound. But your neighbors won't hate you. That's the whole point.
Fahmy, I didn't know this about you. You know who else is a drummer? Gunlock.
Is he really?
Yeah, he played in like a punk rock I don't know what it was in the 80s, some I don't know.
Yeah, he was in some new wave band in the 80s.
Yeah, new wave. That's that's the genre, yeah.
What were they called? The Bond Kings?
I have no idea.
I like that.
They're called
but no, maybe there's something.
The more you drink, the better my jokes
Maybe there's something to trading and recognizing patterns and drumming.
I think
you
might
be onto something.
Mark Minervi is a drummer too, right?
He is as well. He used to play professionally a long time.
That's right.
Hey,
Ivanhoff, go ahead, Jay. Sorry, go ahead.
You're a big concert guy. First concert you're going to see once we get out of this pandemic.
I think there's like 220 concerts I'm going to see in 20. Every band has tours scheduled for late 2021 and 2022. So
it's cool. Crazy.
I'm going to be going to a lot of shows for sure.
Nice.
Ivanhoff, give us some wisdom. Give us something.
You know what I'm thinking about today? Because I saw that Coinbase is going public, and I'm thinking it's kind of ironic that the biggest coin exchange is doing an IPO instead of an ICO. If those guys are really, if that technology is really changing everything, why you're going the old-fashioned way and becoming a publicly traded company instead of just creating an ICO.
Good point.
That's a Jay Woods question. What's the answer, Jay? How are they doing that?
Well, I think they're afraid to do it is what the answer is. The traditional way is the smart and the safe way. And I saw they did file confidentially today, so I don't know what they haven't.
What is that? How do you file?
I know we know about it, but it was confidential. So
exactly.
I never understood that, but they didn't put exchange language. It was very vague. So I would expect probably sometime in January, and it will be interesting to watch. And if Bitcoin continues on this pace, which I don't know what's going to slow it down right now after this breakout, it'll be a fun one to watch.
Who's going to get the listing?
What's that?
Who's going to get the listing?
I would hope the New York Stock Exchange, but I'm obviously biased.
Zor, are you still looking at stocks, Zor?
Yeah.
Anything good?
I'm still looking for my picks.
Zor gave a great one on Twitter just last night. The Shopify, was that last night or was that 2 nights ago?
I think like 2 nights ago.
Yeah.
Yeah, that was a good one. That one, we were talking about, you guys were just talking about buying stocks before they break out. That was one of them.
Yeah.
That was basing for 5-6 months. It tightens up right at the very end. The volume dries up, and there's the buy point. And there were a bunch of others just like that one. Microsoft, Amazon.
NVIDIA's doing it now too.
Same thing, right. Right.
Yeah, it is.
Yeah, Irusha, we talked about this a little bit, how those buy points were near the breakouts, but things have changed a little bit. Maybe
a little bit, yeah.
I mean, if you want to talk about that, maybe computers or maybe things have become too obvious. You have to mix things up a little bit.
Well, I mean, I like scaling into them, so I'll still buy at the breakouts. But I mean, for years, the only breakouts I ever buy are for those stocks that I really like the story on. The fundamentals are strong. Shopify's been one of those stocks that I've been in for a number of years because their story is just incredible. Now, a lot of times when it bases, I'm still slowly out of it. But yeah, Shopify, I've been getting in over the last few weeks or so as it was just setting up because it's just right at the top of my list. And then even when it broke out, I added more to it. So it's not waiting for the breakout. I still buy at the breakouts for those stocks that I think are elite leaders in the market and game-changing companies. But I'm trying to get a little bit of an earlier position, a smaller position, as it's basing and coming up through the 50, because I've found, at least for myself, it's easier to scale into the stock and be more decisive that way, as opposed to at a breakout. Sometimes you're just kind of like, should I wait for that pullback that Brian was talking about before? That's inevitably going to happen, or do I just go for it now and hopefully it works? This way, I don't have to be as right. I'm slowly scaling into stocks, slowly scaling out of them, and that way it enables me to ebb and flow a little bit better.
That's a great point, because when I have a piece of skin in a stock, I'm so much more engaged with it. And it can just be a little bit, right? It can just be 50 shares. So if there's a stock that's going in a base and I think it's going to break out, I'll just put a tester position in there. And that really focuses me on it. I get a feel for how it's moving. And I think there's two types of breakouts. There's markets where the breakout is the payoff, right? That's where you ring the cash register. And there's markets where the breakout is when you get in. This feels like the sort of market where the breakout is the payoff. I feel like the market is moving in the way that all the technical analysis books I read 25 years ago said it should, like all those diagrams that are perfect breakouts. On one hand, that makes me feel nervous.
I threw my books out years ago.
right? On one hand, it makes me feel nervous. It shouldn't be that perfect. But on the other hand,
on the old school books, don't hate Fahmy.
Right? On the other hand, I think it shows the strength of the market. So, it's a great time to be a trader.
Well, I mean, from April to August, just the classic kind of breakouts worked really, really well because we were just in an uptrend, Irusha.
Come on,
exactly.
Right? Like,
we were in
of course, right? And then guess what? Consolidations resolve down in downtrends. Isn't that crazy?
I know, and a lot of times that's telling you that's just giving you that info, that feedback.
Exactly.
If you're all of a sudden your winning streak, your batting average is going down, the market's telling you something. Don't push it at this point.
Sometimes people are like, JC, how did you know that the resolution of that consolidation was going to be higher? And I'm like, well, I didn't know, but the other 9 semiconductors, when they consolidated that way, they broke out. So I don't know, just a hunch that this one was going to do that too, right? You know what I'm saying? Like it's an environment, right?
Yeah. Yeah. Listen to the market. That's always the simplest thing.
Jared, I know you do a lot of technical work. What's part of your process when you're going through the market and analysis? If you want to share a little bit of that.
People talk about top down, bottom up, all that kind of analysis. Yeah, I like to start with the long-term chart and just kind of break down to the intraday, because markets are kind of fractal by nature. You start, every top in a market begins with an intraday top. And just kind of getting a handle on the bigger picture really gives me some perspective on the market. Now, my history personally, I only trade financial futures. I only trade cleared futures contracts. So no stocks, no ETFs, even though I hold these, in my retirement account, I don't actively trade them. So mainly I've traded the E-minis over the years, treasury bonds, 10-year, dabbled in crude oil in 2007. That didn't end well when it was $150 per barrel. I learned a few lessons there, especially with some of the less liquid futures, even though, arguably oil is the most liquid. You got to respect leverage. You got to respect volatility. And my average holding time is probably, I don't know what the average is, but it's got to be around 10 minutes. And the median is probably a little bit longer. So I'm very short term, and that just kind of deals with my personal temperament. I like to go home at the end of the night flat. So I might put on a position that's longer term. And by long term, I mean a few days to a few weeks, which is a swing trade. I might do that through options. And but other than that, it's just kind of getting those little setups. from the ideal hours, which is basically 2:30 a.m. to 11:30 a.m. And it could be the E-minis, it could be some currency futures, what have you. But, the basic setups really haven't changed over the years. And I was talking, that we have less liquidity in the market, so that kind of changes things a little bit. But I think it's important not only to know your time frame, but also to know your market, because what I've learned, and this gets back to the original, this is another thing I've learned this year, is that markets don't always trade the same way. The E-minis, the stock futures, they've become much less technical this year. The Dow, which really surprised me, Dow futures are surprisingly much more technical than S&P futures, and that wasn't the case. Volmageddon in February of 2018, that changed a lot of things, that made the VIX more important to the market. Now I can use that as a timing signal. So it's important to learn how markets are kind of changing and evolving over time. And maybe it's not an evolution, maybe it's a devolution. Maybe it is that way because we don't have those pilots on the floor anymore like Jay, back in the day. But, overall, it's been a tremendous learning process. And I get back to the original position that the setups really don't change over time, but the context does.
No,
let me add something to that as well. I think it's important for those people who are going to watch this, that it's important to know what matters the most within your time frame. So within my time frame, which is a short-term time frame, might be different than a 6-month time frame. So like for me, for example, in the short term, what matters is market structure. What moves stocks within the next 2 to 10 days? And that might be a lot different if my average holding period was 6 months to a year. Then I have to look for a story, a company who has numbers, whatever the case may be. But in the short term, in my opinion, what matters the most is momentum and mean reversion. And I think it's important for people who are looking to trade to understand what works best within their time frame, not the time frame they wish. I wish I can hold things for 6 months. It's your actual time frame based on the trades that you actually do. So in other words,
it's a great point. It's a great point.
So in other words, like say, for example, if I was into numbers, I think there are different ways where you can narrow down the universe of stocks. You can narrow down the universe of stocks with earnings and sales and all that and all those things. But if I was into that, I would say, look, if I'm buying something based on numbers, I'm not going to sell it until those numbers come out again. And they only come out once a quarter, right? That's the way I think when it comes to that. So I think there's a lot of different ways to narrow down the universe. What you want to do is narrow down the universe based on what works best in your time frame. And what you do is if your time frame is 20 days, then take a look at the stocks that, the best performing stocks in the last 20 days for the next 6 months and see if you can find some common characteristics of what they look like before they make a major move.
Actually good. I hadn't really thought of that. That's actually a good point Zor made. If that's your time horizon, go back and see what the best stocks in that time horizon, what they looked like before they did what they did. It's actually good.
It's a great point.
And I'm telling you right now, if you look at the best performing stocks year to date, right, and you put no filters, you can put a $2 price filter, whatever the case may be, there's one common thing that's going to come out every single time, and you can build a scan off for that.
What's that I didn't own any of them?
right.
A lot of new highs.
No, I'm not even going to say it, but all you have to do, and it goes against what normally is said and what's written in books.
A lack of new lows.
No, as a matter of fact, if you go to the top 100 best performing stocks year to date, I can almost guarantee you that 75% came from 52-week lows, and a bunch of them that were all the way on the top just recently had a reverse split.
Yeah, no, there's a lot of them. I think Overstock went from $3 to 150 or whatever.
Overstock, Novavax.
Yeah. There were some that went from low single digits to well into the hundreds.
You know what I always thought about Fahmy, because Fahmy always tells that every time Fahmy gives a presentation, he always asks the question. He's like, what was the first stock to break out to new highs after 9/11, right? Fahmy always says, and it was Whole Foods. And then it absolutely ripped. If you look to see, to Fahmy's joke point, when you look in March and April, the first stocks to break out to new highs, I don't know which one the first one was, but Zoom had to have been one of the first ones.
Zoom was already at new highs.
DocuSign. They were already making new highs.
Yeah. They were already well out.
They were just Irusha. What's the expression? Beach ball underwater.
Yeah, they're just being held by the bear market, right? And then,
I was thinking of you and that stupid joke you always tell. What?
Not so stupid after all, huh?
It's not so stupid.
A truism now.
Yep.
You want to do picks now, and then we can stick around if you guys want to hang out?
Yeah, let's get some trades.
All right, so this is the deal. It's pick. It can be a stock. It can be JC, soybean futures, Bitcoin, whatever you want. It's going to be from closing price December 31st to June 30th. And winner gets a bottle of wine and a $500 donation we'll be making to the charity of their choice. So make it a good pick. Who wants to start?
I'll go. How about Velodyne LiDAR? The stock closed at 2065 today. I will hold it, but I'm going to say if it drops below 18, you can.
No, there's no stop. You give the pick.
No, of course there's a stop. What do you mean? There's a
hedging here, Brian.
No, this is a pick. We're going by your stock can go up 100% between now and the end of the year.
I'm amending the rules. If anyone's listening to this and they go buy these stocks based on what they say,
then they're an idiot.
I'm responsible for answer any questions to anyone who says, "Hey, why is that stock at $5? I thought that was your pick." No, thank you. I will be gone if it's under 18. But after that, I'm game with the rest of your rules.
No, that's a fair point. You're right. There's going to be people who might just.
Fahmy?
No, that's a fair point. I was just. You're right. We're making up these rules as we go.
Why don't you know a disclaimer beforehand? Like, don't buy these recommendations unless you do
the opposite of what we all say, right? So if you like,
short all of our picks, and we'll do a basket of those. No, you're right. There's a disclaimer. This is we'll put this. JC, when you edit this, we'll put the disclaimer up. Basically, consult.
I don't even know how to turn on the computer. Edit this.
Yeah, consult your financial advisor. Past performances, blah blah blah. Yeah, we get that.
So my pick is a small cap biotech. It's called ATNM. It's about $150 million market cap. Obviously, it could be minus 50% or I think plus 500, depending on how their phase 3 trial goes. But since it's a competition, I think, and I like.
Oh, it's a contest, absolutely.
So I'm going with this one.
ATNM?
Yes.
We got Ivan down for that. I hope you get phase 3 approval. Good luck.
Are you actually writing this down like with a pencil, Fahmy?
I'm writing this down with a pencil, and I have a bottle of champagne in the other. I have champagne in the other hand. I'm going to give AYX. I'm giving a software name, AYX. Alteryx.
No stop. Just
no stop, no target. Just it's a contest. Everyone can read the disclaimer and then F themselves. Who's next?
So
I'll go here.
I want to win this contest, so I'm just going to go with either it's going to go 0 or going to go 1,000. So I'm going to go with Mustang Bio. It's MBIO. And they're working on gene therapies to cure some blood cancers and also glioblastoma, which unfortunately took our friend John Borman recently. What I like about the stock is the names that are involved. So on the hedge fund side, Israel Englander's Millennium Fund is in, Jim Simon's Renaissance is in, also Citadel has got a position. On the institutional side, you got JP Morgan, you got Susquehanna, you've got Goldman Sachs there. You look at the insider trades over the last 2 years, lots of buys, no sells. And best thing is it's a $3 stock, so it's a perpetual call. So that's
that's awesome. I should have made I should have made my thought on a contest a little better, but my pick's already in. Jared,
your explanations of either trade
I love the
or
explanation
beer today. He's killing it on the explanation.
The beers, the stocks, he's detailed. I love your
MVP
your detail
today. MVP.
Jared, you're next.
All right. Well, if biotech plays out, that could be 1,000%, 10,000%. I'm still going to stick with Bitcoin, even though I think Ether is going to go a little bit higher. Probably actually a multiple of Bitcoin, but I just don't trust it as much. So I hope that we correct into December 31st, go back down to 19,500 or something like that. And then we really take off to 50, 60,000. I have no idea how this is going to play out. Bitcoin famous for its 80 to 90% drawdowns. But, I think the biggest thing here, JC, I've never been on a call with you before. I've never spoken to you one-on-one. And we're both Miami. 35 years I spent in Miami. Palacio de los Jugos. You know that?
Of course, my grandmother's house is like right around the corner.
Yeah, I love that place.
I learned how to play baseball at Flagami right across the street.
Flagami. I played you guys, and we lost. We were the Bad News Bears of West Kendall. So
JC took me to a Miami, Florida State tailgate. I didn't even care about the game.
Jeez.
I've never seen a tailgate in my life with DJs and salsa dancers and just like.
Listen,
I mean,
you want to go to a
hot
college
dogs and
football
hamburgers.
tailgate. You want to hang out with my friends.
It was a bull market off the charts tailgate.
So anyway, my pick is Flagami. That's my pick.
Dude, that park is old school, man. What about the Pirates? Remember right next door, Pirates?
Yes. Oh my God. All right, you're taking me back here.
Christian, what do you got for us?
By the way, I love the Mike Tyson's Punch Out picture back there. That's got to be signed by
Mike? Dude, he's in good shape, man. He looked good the other night. Roy Jones was exhausted by the second round, but Tyson could have got another 10 rounds.
Yeah. Well, you had to figure that was like, the action was going to be in the first couple rounds, and then, a kind of a clip.
Tyson looked good, man. I didn't think he'd be in that good a shape. He looked good, man. He's scary, dude.
Yeah. So full disclosure, I run in my training room. I have a monthly contest, right, where it's kind of the same principle, except it's only a month. And over the last 3 years, I've never won the contest. So, this will be good. But I'm going to go with if nobody took Solar Winds. No, I'm just kidding. I'm going to go with Palantir, PLTR.
All right. So you're investing in the CIA. I love it.
Hey, they need information all the time.
Hey, you can invest in BlackRock, which is investing in the Fed, and Palantir is investing in the CIA. We could never do that before in our lifetime. So I like it. I like it.
I just want to say thanks, everybody. I have to leave a little bit.
No, thanks for. And by the way, you generously share so much great stuff on the stream, and I wanted to personally thank you for that.
Well.
It's great stuff, and it's very kind of you. So appreciate it.
Have a great end of the year, guys, and I'll see you in 2021.
Yeah, thanks for being with us. Thank you. Zor, are you still screening?
No, I got it. I'm going to go with CRON. CRON.
CRON.
Stock's been trading sideways for an entire year. On 11/6, it trades 45 million shares, 7 times the average daily volume. It's right on top of that box. So I'm going to go with CRON. If you believe in stops for some reason or another, stocks only go up, then you're going to stop yourself out at the low of that big volume day, which is roughly about 670, I think. 670. So CRON, that's my pick.
To the moon. Green hammer. Where can we get those green hammers? Someone's got a Irusha, you must have one.
A green hammer? No, I don't.
The Portnoy green hammer? No?
No, I wish.
Irusha, what do you got for us?
Well, Zoom did pretty well this year, so I'm going to go with another Zoom Info, ticker symbol ZI. And,
ZI.
Yeah, and just to reiterate what everyone else has said, I have no idea what I'm talking about, so you
none
definitely don't want to buy this stock.
We'll make sure to put the disclaimer. None of us know what we're talking about. Use a stop, consult your financial advisor, and the usual stuff. Who's left, Jay?
Yeah, that would be me. I was coming into this, going with, what is in the uptrend, what is in the strongest sector, and I was going to pick NVIDIA or Shopify. But seeing what the other people in this group have picked, there is one little one on my radar, thanks to my teenage son and his esports gaming, addiction. Is 18 hours a day an addiction? I don't know. But there is a small company symbol GMBL, as in gamble, esports and entertainment group. They just did a deal with the Philadelphia Eagles. Once again, my Philadelphia Eagle bias coming out on this. The stock looks like it wants to break a 4-year downtrend. It's made a series of higher lows. So from a risk reward standpoint and a percentage possible gain, this thing looks very interesting to me. I have a little money invested in it, but it's fun money, mad money, if you will. I mean, my biggest holdings will always be the PayPals and the Shopifys and the Amazons of the world, the Googles of the world. But for contest purposes, I think this has potentially a good upside potential.
Awesome. Can you give us another quick NYC story, or maybe, I don't know, a couple people that stuck out to you when you met them on the floor?
Oh my God. I mean,
I know you have millions.
You did ask about Art Cashin, and Art Cashin to me is royalty. He is somebody who's been down there for 55 years, 79 years old, and his mind is so sharp. I only wish I could retain different market situations like he does. He's encyclopedic in his knowledge. He is a true gentleman. He scares me. I don't approach him too often, and like I'll have guests and I'll introduce them to anybody, but they want to meet Art Cashin. I'm like, yeah, I don't want to do the picture with Art Cashin. Here's Bob Pisani. Can we go to Bob? Of all the people down there, the one person that I would stop and listen to every single second of the day is Mr. Cashin. He's just amazing. And still to this day, 79, he's just got such a market sense and the history and how he can just bring it out. If you ever want to meet him, once we get out of COVID, go to Bobby Van's at 4:15 to 5:15 every day after the close. The gentleman is there, his corner bar stool, 2 drinks and he's gone, but he will welcome anybody with a quick story and answer any question that you would have. He's a legend. Now, as far as stories go, there are tons of, whether it's trading situations, the pranks he used to pull, it's just, there are too many to.
What about you and Kathy Ireland? You guys best friends or what?
Kathy Ireland, well, we follow each other on Twitter, but unfortunately she follows 22,000 other people. One of the biggest perks in my career was we traded Time Magazine, which, we would host the swimsuit models every single year. So the swimsuit models would come, and as the market maker, you get to show them everything you do, photo ops, and then you would get invited to the after party, which was one of the greatest things in the world. So there were some perks. Those pictures are priceless. They got me in a little trouble at home, but it was well worth it. It was,
Never invited me to any of those.
Well, I had to keep my mouth quiet on those parties. Those were, you're invited, but if you tell anyone, we'll kill you kind of deals. And you had to wait like 2 or 3 days to put it to social media, and whatever they said goes. You're not going to mess that up. That's for sure. So
what's everyone's best guess on when we get out of this to like 80, 90% back to normal?
Depends what state you live in.
That's a good point.
Good answer.
I forget you're in California.
California, it's going to be 2040, I think.
Exactly.
Yeah, that should be the other contest, but it's hard to gauge that. You're right. It depends on what state. I'd like to be optimistic. And JC and I were talking when we first hopped on about if the Spanish flu was two years with, 100 years ago with zero technology, zero vaccine, zero biotech companies. If that was 2 years, I'd like to think, ours would be less than that.
Here's the question. At what point can we be like, hey, JC and Fahmy are throwing a party in Vegas. We're all going. And then without even thinking about it, we'll book a flight and go. That's the question. When is that going to happen?
This weekend, Irusha would show up.
I'm on my way right now.
I think something to on your point there, though, is what came right after the Spanish flu, right? The Roaring 20s. Big expansion, right?
Exactly what
and
really
my worry is this, and I know this is a little bit off stocks, but like there's a certain element in our society, like I call them the enemy of fun, right? They're the people that are always telling you what to do, and this is giving them a real good excuse, right? A justified excuse to tell other people how they should live their lives and whatever. But like at some point that's got to end, and I feel like those people, they have a vested interest in prolonging this sort of situation we're in so that they can be the gatekeepers of what we should. And I just really think that's dangerous. Like, I think we need to rebel against that. We have to get back to normal at some point. We can't do this forever. I mean, it seems like we can, but we really can't.
Jay, to your point, I'm just looking forward to the concerts, when we can go to a concert and sporting events and be full stadiums and arenas and not have to be concerned about it.
Yeah.
From what I'm hearing, the vaccine is getting rolled out faster than they anticipated. Now with Moderna having theirs approved, it's going to happen faster than I hope faster than we think. And if, personally, as the father of a high school senior, my goal is for her to go to her prom, her to have a normal graduation and some sort of closure to that high school career, and then start freshman year in college normal. So I'm hoping April, May, we can start to see some sort of return to normalcy. The one thing, and people in New York will understand this, in New York, we didn't really mess around. We got hit hard, probably harder than anybody when this first started. And when you go into the city, when you're on the subway, when you're on the PATH train, no one messes around. Everyone took it seriously, and hopefully we will continue to do so if we know we have to get out of this. But honestly, to your point, yes, I want to go to a bar and hang out. I want to go to concerts. The concert I want to go to is see The Killers. They had a new album drop, and I've seen all their other tours. This is the one I wanted to see. And Def Leppard was coming back too. That was one. And you're taking me to that one, Fahmy. I'm going to hold
That's done. That's done. Right, that's an easy one.
But, I'm hopeful that, as Brian was saying, that this leads to the next roaring 20s, if you will, which ironically is the 20s again, that we saw after the Spanish flu. I'm not going to make any crazy prediction, but I'm hopeful once we get out of this, the best is yet to come.
I would like to hope, like NBA and NHL are doing shortened seasons, December and January, to end on a regular schedule, but then the hope is to be back on a regular schedule next October.
Yeah, baseball season to me would be the key. Let's start it on time, end it on time. We'll see. And then the NFL is skating through this somehow. I don't know how they're managing. It would be nice if we saw people at the Super Bowl, but that's really, a little crazy to think that. But it is in Florida, so who knows? Just getting out in front of people is something I look forward to more than anything.
And, my favorite sport has not – they've only thrived during this time. In fact, they're bigger than ever, UFC, right? They figured out a way to still – so back when there were no sports, they were televised on ESPN. How many more fans did they get this year? So I think that's the other thing is coming out of this whole situation, people are going to figure out ways to adapt. Like there's businesses around here, and you can tell who the good businesses are and the less well-run businesses, because some are really adapting and they're doing better and they're going to take more market share, and others are falling off. So I think we're going to come out of this better. I don't want to be Pollyannish, but I really feel like we're going to be in a better place, but we really need to get that mentality out there that, hey, we need to get to a normal place again. We can't be in a perpetual lockdown. That's just not, I don't want to be jingoistic, but that's just not the American way.
When you started saying your favorite sport, I thought you were going to say poker, not UFC. Hey, if it's on ESPN, it's a sport, right?
ESPN right. Ocho. They were playing on ESPN. They were playing some crazy stuff. Remember? Yep. They were playing like what's the thing we throw the bags?
Cornhole. Yeah.
Cornhole. Yeah.
Cornhole.
Curling. I got into curling during that time.
Yes. I watched all of it because there was nothing else to watch.
People were actually betting on that stuff, these degenerates.
He's sweeping. Get it.
Are we good on trades? We got everything?
I wrote them all down. I got to say, guys, thank you so much for hanging out. Merry Christmas, Happy Holidays to everybody, for being here, for sharing your wisdom. I'm very grateful for all my awesome friends. You guys are just, I mean this heartfelt. You're very special to me, and I appreciate all everything you guys have done for me. So I just wanted to express my gratitude.
Thanks for doing this, Joe. Appreciate it.
Definitely. Thanks, JC, too. Yep.
Thank you, Joe.
Yeah, man, of course. Thanks, everybody, for coming.
We'll hopefully do this again soon.
Hell yeah.
Definitely, yeah.
So good. I'm OG, overly grateful for the chance to kill the beat, bro. Cain and Abel, ain't trying to lay low, peep the shine. Comfortable in my own skin, peace of mind. What's mine is mine, what's yours is yours. These bars hit every measure, homie, get them in force. Like the 18 beat